Good day, future lawyers. This is the audio flashcards for insurance covering the contract of insurance and insurable interest. Let's start right away. A contract of insurance is an agreement whereby one undertakes to indemnify another against loss, damage, or liability arising from an unknown or contingent event. A contract of insurance is still a contract. Thus, it must have all the essential elements of a valid contract as enumerated in Article 1318 of the new Civil Code. Just like any other contract, it requires a cause or consideration. The consideration is the premium which must be paid at the time and in the way and manner specified in the policy. An insurance contract is consensual. As a general rule. An insurance contract is perfected by the meeting of the minds of the parties. There must be concurrence of offer and acceptance. An insurance contract exists when the following elements concur. 1. The insured has an insurable interest. 2. The insured is subject to a risk of loss by the happening of the designated peril. 3. The insurer assumes the risk. 4. Such assumption of risk is part of a general scheme to distribute actual losses among a large group of persons bearing a similar risk. And 5. In consideration of the insurer's promise, the insured pays a premium. Film Care versus Court of Appeals, March 2002. A past event unknown to the parties at the time of the perfection of the contract may be insured against, and recovery thereon may be had if the terms of the policy cover loss of this nature. This is illustrated in marine insurance, where at the time the policy was executed, the vessel subject of the insurance may have already sunk, but it was unknown to the parties at the time the insurance contract was executed. The insurer is liable for a fortuitous event. By its very nature, the liability of the insurer attaches to the happening of the contingent event insured against, and that event should have happened without intervention in any manner by the insured. An insurance contract is one involving an assumption of risk by the insurer. As a general rule, only non-life insurance or property insurance contracts are contracts of indemnity. Life insurance contracts are not contracts of indemnity because the value of a life is immeasurable, except where the basis of the insurable interest of the policy owner on the life of the insured is a commercial relationship. In general, insurable interest is that interest which a person is deemed to have in the subject matter insured, where he has a relation or connection with or concern in it, such that the person will derive pecuniary benefit or advantage from the preservation of the subject matter insured, and will suffer pecuniary loss or damage from its destruction, termination, or injury by the happening of the event insured against. Ladican versus Insular. Insurable interest in life insurance. Insurable interest in life is the interest which a person has in his life, or the interest which he may have in the lives of other persons, one, on whom he depends wholly or in part for education or support, or under legal obligation to him to pay money, to deliver property, or to render service, and upon whose life any estate or interest vested in him depends. The purpose of the law in requiring that the person procuring the insurance must have insurable interest in the life insured is to take off all temptation to destroy the life of the insured because of his life insurance. This also prevents the contract from becoming a wagering contract. Section 19 of Insurance Code. An interest in property insured must exist when the insurance takes effect and when the loss occurs, but need not exist in the meantime. And the interest in life or health of a person insured must exist when the insurance takes effect, but need not exist thereafter or when the loss occurs. Insurable interest in property. Insurable interest is every interest in property, whether real or personal, or any relation thereto, or liability in respect thereof, of such nature that a contemplated peril might directly damnify the insured. A non-life insurance policy, such as the fire insurance policy taken over merchandise, is primarily a contract of indemnity. Now let us distinguish between insurable interest in life insurance and insurable interest in property insurance. Insurable interest in life insurance is required to exist at the time of the perfection of the insurance contract, while insurable interest in property insurance is required at the time of the perfection of the contract and at the time of the loss but need not exist in the meantime. The rule in life insurance taken on the life of others is that the insurable interest on the said life must exist only at the time the insurance was taken. A subsequent termination of the relationship from which the insurable interest arises will not affect the policy. In life insurance, the beneficiary need not have an insurable interest on the life of the insured. In property insurance, the beneficiary must have an insurable interest in the property insured. Section 18 of the Insurance Code provides no contract or policy of insurance on property shall be enforceable except for the benefit of some person having an insurable interest in the property insured. Anyone has an insurable interest in property who derives a benefit from its existence or would suffer loss from its destruction. Section 17 provides the measure of an insurable interest in property is the extent to which the insured might be damnified by the loss or injury thereof. An insurable interest in property may consist of A. An existing interest, B. An inchoate interest founded on an existing interest, and C. An expectancy coupled with an existing interest in that out of which the expectancy arises. The following are examples of an insurable inchoate interest in the property founded on an existing interest. 1. Contractor's interest to the completed building for unpaid construction cost. 2. Lessor's interest in the improvements made by the lessee. And 3. Naked owner's interest over property over which another person has beneficial title. A vendee consignee of goods in transit under a perfected contract of sale is vested with an equitable title to the goods even before the receipt by him of the goods to constitute an insurable interest in property. Filipino versus Court of Appeals. Each may take separate insurances over the same property up to the extent of their respective insurable interest. For example, a mortgagor has insurable interest on his property as the owner up to the full value of his property, irrespective of any mortgage on said property in general. A mortgagee's insurable interest is up to the extent of his credit. Bar question. Siriaco leased a commercial apartment from Supreme Building Corporation (SBC). One of the provisions of the one-year lease contract states, "The lessee shall not insure against fire the chattels, merchandise, textiles, goods, and effects placed at any stall or store or space in the leased premises, without first obtaining the written consent of the lessor. If the lessee obtains fire insurance coverage without the consent of the lessor, the insurance policy is deemed assigned and transferred to the lessor for the latter's benefit. Notwithstanding the stipulation in the contract, without consent of SBC, Siriaco insured the merchandise inside the leased premises against loss by fire in the amount of 500,000 pesos with First United Insurance Corporation or FUIC. A day before the lease contract expired, fire broke out inside the leased premises, damaging Siriaco's merchandise. Having learned of the insurance earlier procured by Siriaco, SBC demanded from FUIC the proceeds of the insurance policy be paid directly to it as provided in the lease contract. Who is legally entitled to receive the insurance proceeds? Explain. Siriaco is legally entitled to the proceeds of the insurance. It is Siriaco as lessee who has insurable interest over the chattels, merchandise, textiles, goods, and effects, even if the premises wherein such merchandise is placed is leased. SBC has no insurable interest over the same, although he has a separate and distinct insurable interest over the premises. In case of loss, therefore, of said goods, it is Siriaco who should receive the proceeds of the insurance, notwithstanding the provision of the lease contract. The insurer cannot be compelled to pay the proceeds to the person who has no insurable interest in the property. The liability of the insured for violating their lease contract in that he obtained a fire insurance policy over their merchandise without the consent of the owner of the leased premises is a separate and distinct issue. SBC cannot be entitled to the insurance proceeds because it has no insurable interest in the subject matter of the insurance. Change of interest in the insurance. Section 20 of the Insurance Code provides, except in the cases specified in the next four sections and in cases of life, accident, and health insurance, a change of interest in any part of a thing insured unaccompanied by a corresponding change of interest in the insurance suspends the insurance to an equivalent extent until the interest in the thing and the interest in the insurance are vested in the same person. For example, the ownership of the property did not continue in the same person up to the time of the loss. The fact that the ownership of the property had been changed prior to the loss without any corresponding change having been effected in the policy of insurance. The mere transfer of a thing insured does not transfer the policy, but suspends it until the same person becomes the owner of both the policy and the thing insured. If the interest in the property insured and the insurance are in different persons at the time of the loss, neither can recover under the policy. And there we go. We have been productive. So thank you so much for watching and study well. Bye!